Hi, everybody. This is Gary Demas, Sentiment Timing, and this is our technical video report for Thursday, July 10th, 2025. So we saw the S&P make some new all-time highs, but it was anything but a clean breakout. In the morning notes, I said really what the bulls had to do was get it above the 6270, and if they did, we're probably going to see a run towards the previous highs that we made last Thursday. And we had a little bit of pullback, and this is just a 2-minute chart. And then from there, every little pull, we touched the moving average, and every little pullback got bid back up. Once we got above the previous all-time highs, I actually did think they were making a run for the 6,300, but then they started hitting their head here, and then from here we just saw a really, really deep drop. It went from 62.88 all the way down to 62.74, so almost a 15-point drop in 5 minutes. And we found support and then bounced up. The S&P still closed up 17 points for the day, but just sticking to the theme, we had IWM had the same thing with the late day sell-off, where we had, and if you could look, this is what I was doing, because in the trade room we actually, when the S&P was at 62 at 225, 225, I had said to take I was doing a straddle trade, and basically what that is you're buying the calls and the puts at the 225 strike, and from there we had this, the move came up, made it. I told them to close the call side above 225.90. It made it up to 226, and then from there started coming down, and we were actually able to make money on the put side too. So it was a really great trading day for the room. But getting back to the spiders here. So we made the new all-time highs, and then it pulled back, and we actually closed back below these. But this was an intraday new all-time high, and really it didn't shock me that much. I mean, I really thought we were going to 6,300, but you can see we had bearish divergences on the 5-minute chart. We had bearish divergences on the 15-minute chart, and we had bearish divergences on the hourly chart. So when you get those, you can get these moves, and then typically it just means that the bulls are a little bit out of gas. It doesn't mean that they can't move the tape higher. And really, what the reason why, what I explained in the morning notes, is the carry trade that's out there. But the problem with the carry trade is, yes, it could grind higher, and in previous times that we've seen that, interest rates were really low, so it was an easy trade. There was no volatility, but the VIX is actually at like 16, so it's about $4 more than typically where this carry trade just runs kind of smoothly. And the problem with the good thing about the carry trade is they can just grind the market higher, but if there's any blip in the news, a lot of times it's really hard to unwind that position. Well, I know it's hard because everybody's basically borrowing the money at cheap interest, lower interest rates, and then buying assets at a better rate, or a better return, I should say. And the thing is that when that trade goes sour, you have everybody that's in that trade has to get out, and that's where we get dramatic moves to the downside. When it happens, I'm not sure, but with the geopolitical tension, the tariff talks back on the table again, I think it's a little bit of a risky trade, but it is what it is right now. But in any case, if the bulls are going to continue higher, you have to assume that we're going to make the move up to the 6,300. I know what's going to happen if they start consolidating here and just going up and down. It's actually going to look like a cup and a handle trade, cup and handle pattern, and it's actually pretty big too, 62 to 62.80. And if they were to break out of it, you're looking at a move coming up to all the way up to the 63.40 level would be the target. But I don't know if this is going to be a cup and handle pattern. It has to really just kind of go this way. It could even have a little downhill tilt to it. But it's really consolidation. So like I said, the bearish divergences are there. I prefer the small caps. I think they've outperformed pretty much every day since I went market neutral. And hang on one sec. And this is what I put in our actual premium report, because it was May 19th that I went market neutral. And what I wanted to do is see what was the, how is the price done since May 19th and how, return wise. And you can see IWM up 8%, S&P up 5%, and the Qs are up 6%. But I really just concentrate on the S&P and the S&P and the small cap. So it's whatever amount that I missed on the way, with the S&P, I made more than that with the Russell 2000. So to me, I'm not, I'm not upset. I wasn't expecting it to continue straight up like this, but this is what the market's doing. And really, when you get in trouble is when you try shorting the market, when it has that type of momentum going. And I just decided to go market neutral, at least on the S&P, and going long on the small caps. And it's been working out fantastic. And like I said, I just showed you the trade that we made today in the room. And it was, it was really a fantastic trade, because we made almost, even if the put side of it expired worthless, we still would have made $400 or $500. You could have closed out the put side and made like $600 or $700. But if anybody, if you held it through the whole thing, you made another $500-$600 on the put side. So, and it's not a big investment. We're not talking about you have to put in $10,000 or whatever. This is a $600, $700, $800 investment that we're doing, that we've been doubling on a daily basis. So anyway, so on the downside, you can see this support right here. That's sitting. It's the moving average as well as this right here. That's at 62.67. If the bears can get through it, then I'm anticipating we're going to come down and test this support right here at the 62.32, and maybe even go a little bit deeper and test the 62.22. Now, if it starts taking that out, really, I've been saying this since this rally started, that until the bears get priced through this 61.50, the bulls are going to remain in control. This would be the first line, the panic line, but then this is really another important line right here, the 63.60. But even if it gets down to the 60.50, from where we are, it's a 200 point drop, and that's really what I was looking for before. But we're just really, really extended right now, and like I said, I'm cautious on the S&P, and I know if that does, when it starts its pullback, I know IWM will follow it. I do not believe the small caps are going to move higher as the S&P is moving lower. It's going to follow it, but I just believe it will have I don't think it will be as quick as the S&P, and I think when it recovers, the IWM and the small caps will outperform, because it still has another 10% to get to the all-time highs. So it has a lot of catch-up to play. I've been reading, even as I've been saying this, that money is starting to rotate out of big caps and S&P stocks and moving into the small caps, and that's what I was saying. The people that miss this rally are going to have to play catch up, and you don't want to play catch up at something that's all at all-time highs. You want to play catch up with something that still has a lot of meat on the bone, and that's the S&P. I'm at the IWM. So again, this is going to be the first line. Well, let me do this. So the first line in this, that the bulls, if they can get back above this the 62.84, then I believe that we're heading up to the 6,300, maybe even a little bit higher. If the bears can, keep it below pretty much right where we are, where we open lower, and then they start using this moving average as a resistance, the next, line we're looking at is 62.67, and then we just have the regular moving average, but that's only a 5-minute chart. So I'd be looking at a move coming back down to the 62.22. But you can see this is really the support level right here, the 62.68. So the bears got to get through that for a test back down to these levels. If the bulls get above here, we're looking at a move somewhere up into the 6,300. But again, we have the sell signals in place, so I'm keeping my cautious look on that, and we'll continue just to eye down the small caps. So with that, have a great night, and I'll talk to you guys in a